Hello everyone, welcome back to the another session of accounts with me Shiva Kumar from Gitanjali Junior College. In the last video we have seen with the journal entries, and in this video also we will be seeing the journal entries only. We will be considering this video to be the part 2 for journal entries, and before seeing this video refer to the part 1 of this video. In that we have seen purchases, sales, purchase return, sales return, and in this video now we are seeing, as of now we have expenses paid and incomes received. How to record them in the journal entries, because recording the journal entries is the first step. Knowing that is really important, because if you know the first step, then the second step becomes easy, second step, third step becomes easy. The first step is always an important step in any concept, like in journal entries also. With the first concept is really important, called journal entries. So now we will brush up with the golden principle, that is rules for debit and credit. Personal account is stating that debit the receiver and credit the giver. Real account is stating that debit what comes in, the physical things what comes in, and credit what goes out. Okay. Next, nominal account is stating that debit all expenses and losses and credit all incomes and gains. So these are the golden principles of accounts. So following with that principles, we prepare the journal entries. So now we will be recording how to record the expenses, and I have also some questions, transactions regarding the incomes also. So now we will see first how to record the expenses. In the month of June I have these dates, and these are the transactions. Paid for printing expenses. The first transaction is telling that you have paid for printing expenses. Done. Now you are paying that, it means you are paying cash. Okay, that is money is going out of from the business. Your cash is going out of the business. In this, whenever we pay any expense, in that our money, that is cash, is going out. Going out means going out of the business. Okay. Now this is being an expenditure. Nominal account is talking about the expenditures. In the nominal account, debit, what should be debited according to nominal account? Debit all expenses and losses. Now paid for printing expense is an expenditure for the business. Now that printing expense, that is printing expenses, should be debited according to the nominal account rule, that is debit all expenses and losses. Now what should I debit? Printing expenses account. So debtor 2. What should I credit now? What should I credit? Whenever I am paying for any of the expenses, I am paying the cash. Now cash is going out of the business. Cash is a real concept, right? Cash is real, physically existing. So that cash is going out of the business. So real account rule, that is credit, what goes out? What is going out? Cash. So write it here, cash account. What's the narration? Narration stating that being printing expenses paid. Okay, how much is the amount? 900. 900 is the amount. So for debit, I have written it is the debit line only, and for credit, I have written the amount in credit line only. And this is the narration. I have clearly explained what is narration and what is the particulars and all. In the part 1 video, please refer to that, because explaining the same thing once again will make the video lengthier. So I don't want to make videos lengthy. So please do refer to the first video of the journal entries. That's part 1 of journal entries. Okay. Now, so I have written what the date for this is 11th June. Okay. Now, second, let us rub this. Now, what is the second transaction? The second transaction is also talking about the expenditures, that is wages paid. What is wages? Wages which is paid. Wages which is paid to the laborers. That is the amount which is paid to the laborers is called wages. Wages. There is a difference, okay, between wages and I have the salaries. Wages are given on the daily basis or the weekly basis, but not the monthly basis. If you are receiving that in the monthly basis, that's your salary. So labor receive the amount daily or they receive the amount weekly. So wages is the amount which is paid to the labor. Okay. So now wages is also an expenditure for us. For any business, wages is also an expenditure. So now, according to the nominal rule, debit all expenses and losses. What is wages? Wages is an expenditure, debit that. Wages account that are now 2. Whenever you are paying wages, are we receiving anything? No. Something is going out from us. That is, cash is going out of the business. Okay. So, according to the real account credit rule, what goes out? Credit what goes out? Now, what is going out whenever you are paying the wages? That is, cash is going out. So, cash account. How much is the amount given there? 3,000. Okay. So, I have written the amount also. I'll write the narration being wages paid. Okay. So, that's the narration. What's it? Actually, first I should write the date, but I missed it once again. So, 15th June. So, this is how the transactions are written for the expenditure. Very simple. See, in a single video of 10 minutes, I can't explain you journal entries because no one can explain journal entries in 10 minutes. So it takes time. So do watch the videos. Don't think that for journal entries there are 2 videos, 3 videos. Because I can't explain journal entries. I guess no one can explain it in 10 minutes. Because a deep explanation needs some time. Then, so this is how we need to record the expenses. So I have some more expenses to be recorded. So I'll see to that. So I'll rub the question first. Because next question visibility becomes easy. Next question's transactions date is 23rd June. Okay, rent paid. Now you are paying rent. Okay, whenever you are paying rent, what is happening? Cash is going from you. Same. Any expenditure, you take electricity bill, you take transport charges, you take advertisement expenses paid. Whenever any business is paying anything, that is paying for the expenses, cash is going out. So this is very simple entry. And now we are paying for rent purpose. We are paying how much? 1500 rupees. Now, rent is an income or expenditure for us whenever you are paying rent. Is that an expenditure for you or an income for you? Expenditure, definitely. So, what is the rule for expenditures? Nominal account is saying that debit all expenses. So rent should be debited. Rent account debtor 2. Now what should I credit? Credit what goes out. Credit what goes out. Real rule. So what is that? Cash is going out. So cash account. How much is that? 1500 and 1500 in the debit and credit columns. So what's the narration for this? Being rent paid. Okay, you have paid the rent. So what's the next transaction? The next transaction is salaries paid. Sorry, paid salaries. Paid salaries. Now, whenever you are paying any salary for your employees, what is happening? Are you receiving the money or are you paying the money? Whenever any expenditure, for any of the expenditures, we are paying for that. So, we should consider that cash is going out, and we should consider that cash is going for what kind of expenditure. Here it's salary. So salary being an expenditure for the business, according to the nominal debit rule, debit all expenses and losses, debit salaries. Debit salaries. So salary account debtor 2. Whenever you're paying salaries, what's happening? Is there anything coming in? No. Cash is going out instead. So what is that? What is going out? Cash is going out. Okay. So the entry is salary account debtor to cash account. What's the narration for that? Being salaries paid. So this is the narration for that. So what's the date actually? 25th of June. What is the amount? 5,000 rupees is the amount for salaries. Okay. So 5,000 in debit column, 5,000 in credit column. Then, so this is how you need to record the expenditures in the books of accounts. That is that the first book of account, the book of primary entry, that is journal. Okay, journal entries book. So this is how you need to record the expenditures. Now I have, along with this, I have some incomes also. Okay, that is, I have taken 3 incomes. So I'll rub this first. So now we will see how to record the incomes in the books of accounts. Okay, how to record the how to record the incomes in the journal entry book. Okay, journal book. So first one, the date is 27th of June. Okay, commission received rupees 2,000. What is the transaction? Commission received rupees 2,000. Now whenever you are receiving commission, you are not receiving commission, actually you are receiving the cash on the name of commission. Because whenever you are receiving commission, are you receiving commission? No, you are receiving the cash on the name of commission. So whenever we are receiving any income, so what we are receiving actually, that's cash. What we are receiving? Cash. So where all the incomes we are receiving cash. We are receiving cash. Then now while receiving the commission, cash is coming in. Okay, understood. Anything going out? No, nothing is going out. What is happening then? What is happening? So that is, commission is being received. Now your commission here is an income for you or an expenditure for you? Now you are receiving commission. If you are paying the commission, that's an expenditure. But you are receiving the commission. Question is saying that commission received. Now you are receiving that. So whenever you are receiving commission, that's an income. So according to the nominal account rule, that is credit all incomes and gains. Now commission here is your income. So commission account should be credited. Now what is to be debited? Whenever you are receiving commission, are you receiving commission? No, we are receiving cash on the name of commission. So what we are receiving? Cash. Now why did I debit cash? According to the real rule, debit what comes in. Cash is coming in, so I debited cash. Okay, so cash account debtor to nominal account rule, that is credit all incomes and gains, that is commission. So commission account, cash account debtor to commission account. So this is how you need to record the income. Okay, what's the amount for that? 2000. So 2000 in the debit column, 2000 in the credit column. Done? So what's the narration for this? Being commission received. Being commission received. Close the transaction. What's the next transaction? So next transaction is interest received. Now you have received interest. What you have received? Interest. So whenever you are receiving interest, once again, what is received actually? What is received? Cash. So debit what comes in? What is coming in? Cash account. Okay, cash account or debtor 2. Why this cash is coming in? Why cash is coming into the business? The question is interest received. Now you have received some interest. So interest being an income for you, whenever you are receiving interest, that's an income. But whenever you are paying interest, that's an expenditure. He is talking about interest received. So it's an income for you. According to the nominal account credit rule, that is credit all incomes and gains. Now interest here is an income. Interest. Okay, interest account should be credited. That's being narration. I am writing the narration. Being interest received. How much is the amount? 3000. How much is the amount? 3000. So draw the line. What's the date actually? 28th of June. Done. The next transaction, that is 30th June, that is rent received rupees 6500. What is that? Rent received rupees 6500. Just now we have seen in the expenses rent paid we have seen. Now we are seeing rent received. Now rent can be paid, rent can be received. Interest can be paid, interest can be received. Commission can be paid, commission can be received for a business. So now you are receiving the rent. Okay, how much you are receiving? 6500. Whenever you are receiving the interest, that interest is an income for you or an expenditure for you? Definitely an income. Definitely an income. So now rent here is an income for you. So according to the nominal account credit rule, credit all incomes and gains. Now rent is an income for you. So to rent account. Now what is to be debited? Whenever you are receiving the rent, actually you are not receiving the rent, you are receiving the cash. Likewise, whenever you are paying for the expenses, you are not paying electricity bill, you are paying electricity bill in the form of cash. So whenever you are paying anything, cash is going out. Whenever you are receiving anything, cash is coming in the case of incomes and expenses. So now here it's an income for us. So for now I am receiving cash. What am I receiving? Cash. Cash account debtor to rent account. Cash account debtor to rent account. So what's the narration? Being rent received. Rent received. How much is that? 6,500. 6,500. Okay, draw the line. So this is how the incomes and expenditures are recorded. Journal entries are really important, and journal entries are easy when you know this. And for this, that the rules for debit and credit, also we made one video that's available in our channel, so you can refer to that video for the rules for debit and credit. Okay, there we have what's personal account, real account and nominal account, and what's the rules. Okay, so in the next video, so this is going to be a short video, and in the next video I'll be explaining you a problem. Okay, I'll select one problem, and in that video we will be solving the entire problem. Okay, so as of now we have seen today how to record the expenses and incomes. Okay, done na? So thank you everyone, thank you for watching the video, and do share this video to your friends and relatives who are in intermediate first year, graduation first year, because and the first years they have journal entries. Okay, but thank you everyone.